gold will probably go a lot higher. Not probably, but I think in 5-10 years time, it will be a lot higher. It's not just making new highs in dollars, but also in pounds, euros, all fiat currencies. So if they revalue and they revalue to even 3,000, I think gold will explode higher because it will be an admission that the fiat dollar has failed.
Gold entered 2025 positively, building on its strong performance in 2024. Investors closely monitor signals regarding the U.S. Federal Reserve's interest rate strategy and President-elect Donald Trump's proposed tariff policies. With inflation remaining elevated, markets anticipate a cautious stance from the Fed. Upcoming economic data will be crucial in shaping market expectations. Meanwhile, precious metals delivered mixed results throughout 2024. Mario Innecco, widely known as Innecco 64, brings over 20 years of experience in the City of London, specializing in exchange-traded derivatives. As a trusted voice in finance and economics, Mario believes that the U.S. Treasury and Federal Reserve have deliberately maintained gold at its statutory rate of $42.22 per ounce since 1973. He suggests revising this statutory rate, for instance to $3,000 per ounce, could trigger a significant surge in gold prices. Donald Trump is set to be sworn in as President of the United States on January 20th. His proposed tariffs and protectionist trade policies are widely anticipated to be inflationary, potentially triggering trade wars and bolstering gold's appeal as a safe haven asset. With inflation already exceeding the Federal Reserve's 2% target, traders expect the Fed to adopt a cautious approach to interest rate cuts in 2025. Mario Innecco underscores ongoing discussions about imposing tariffs on gold and silver. He notes that while such tariffs might initially push prices higher in dollar terms, they also highlight broader inflationary pressures. Innecco points out that former President Trump's economic policies, marked by significant fiscal deficits, have historically been a key driver of inflation. Let's delve into the video to gain further insights. Before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I think the U.S. Treasury and the Fed, they've kept gold at the statutory rate of $42.22 since, I think, 1973. After Nixon suspended the convertibility of the dollar or closed the gold window, gold was fixed at 35, then they raised it to 38 and then 42.22, and they've left it there ever since. And people wonder, why do they do that? Well, I think Jim Rickards said once they do it to basically denigrate gold, to say that it doesn't matter what the gold price is. We just leave it at 42.22. I think it's worth about $11 billion on the Fed's balance sheet, the certificate. So if they revalue and they revalue to even 3,000, I think gold will explode higher because it will be an admission that the fiat dollar has failed. I think the ECB, they keep gold on the balance sheet at the market price. So I don't know about the Dutch central bank, but I think, if they change the statutory rate in the U.S., and that has to go through Congress, I think. And yes, there's a lot of good policies that they're talking about. But as I told you before we came on, there's even speculation that they might put tariffs on gold and silver. And that would be good for the price of gold in dollars. And but it just goes to show that tariffs could, in the short term, drive prices higher. And and I think Trump's policies could be inflationary as well. I don't think he talks about bringing inflation down. I mean, we saw CPI is around 2.7. It came out today. But even if you bring it down to 2%, we still devaluing the currency. And Trump, up until 2019, he was running pretty big deficits already, like 5% of GDP, 2019, and then 2020 and 21. I know there was that event that I don't want to say the whole name, but we went to 15% deficit to GDP. So Trump he likes that, and he likes spending. I think he'll probably do things that will help the economy. but the debt just seems to me a really big, elephant in the China tea shop, and even Trump or anyone else, I think, will have a difficult time lowering the debt and the deficit, especially with where bond yields are and interest rates, and the fact that you could see inflationary pressures. And we're seeing, Andy, that China is reacting to this, the talk of tariffs and maybe even sanctions, coming out with announcing that they're going to monetary policy, they're going to be moderately loose for the first time since 2010. They're increasing fiscal policy. So China is trying to inflate and to try to weaken their currency in order to fight that. So I think, it's still touch and go. I'm not too sure. We're going to have to wait and see. And I think, as I said, it's there's a bit too much euphoria, and things might change in the next few months.
Gold experienced a remarkable year, achieving record-breaking highs and registering its largest annual gain in 14 years. According to Goldman Sachs research, this surge was driven by growing concerns over financial sanctions and the U.S.'s debt sustainability. Central banks have increasingly turned to gold as a hedge against the United States' geopolitical risks and fiscal uncertainties. Aggressive gold purchases by central banks in China, India, and the U.S. further fueled the upward momentum in gold prices. A recent survey by the World Gold Council revealed that 81% of respondents anticipate central banks will continue increasing their gold reserves in the coming year, underscoring gold's enduring appeal as a safe haven asset. Mario Innecco believes a blockchain-based gold standard could be a viable solution by ensuring transparency and accountability among central banks and treasuries. He points out that while certain officials, like a Dutch central banker, have acknowledged that gold may require revaluation during a crisis, such disclosures rarely gain traction with the general public. Now let's redirect our attention to a video.
I think what they want to do first, because the concentration of gold in New York and London, that the reason why it was such a big concentration 50 years ago is because of the gold standard in the 19th century, early 20th century, and Britain ran that, and it was the empire. So a lot of the business flowed through London, so it had the tradition. And then New York and the U.S. Stepped up to the plate after World War II. So I think what it shows is that, the world's moving away from the Anglo-American axis, and they've seen that a lot of times you can't really get your gold. For example, Germany, they asked for their gold to be repatriated from the New York Fed. Part of it, I think, not all, and it took like 4 years to get that gold back. We've seen that Venezuela asked for the last gold they have at the Bank of England, and they won't release that. And and also with 2022, what happened? Russia, Ukraine, they froze all the Russian assets. And so that's how I see that. As to the question about cryptocurrencies or blockchain, I'm sorry, that's possible. I guess the blockchain would be a good way to have a gold standard between the countries of the world, because it would keep them honest, because it was supposed to be an open ledger. But I don't think it will be open to the public, but it will be open to the central banks of the world and treasuries, and they can see who has how much. If a certain country starts printing too much money, doesn't have enough gold to back the money supply, the people can sell that currency, and the interest rates will rise there, and then people will put gold back to work in there. That's how it would work. So it's possible, but it's only speculation. But I still think they want to have gold as a reserve if they're gonna also not hold as many treasuries as a reserve asset. So that's the other thing as well. I think the rising price of gold is already like a de facto reset, but there could be like a weekend where the powers that be from major countries like US, China, Russia, EU decide to reset the price of gold and much higher, so that they can reliquify the system. That might come after a major crisis, or they might just keep doing it gradually as they're doing it. In my opinion, that the reason the public isn't told about it is because it doesn't work if you tell the public. And that's why I think there's always so many stories trying to denigrate gold and silver. They came out the other day saying that El Salvador has $3 trillion worth of gold. They said that about Uganda last year, 13 trillion. And the same story about China. I think it's all just trying to keep people away from protecting themselves with gold. So that's why they don't talk about it. Sometimes you hear people like the Dutch central banker, I think it was last year, saying that in a crisis we'd have to revalue it. But how many people do you think read that, Andy? It's only people who follow us who do. And if you try to explain that to people, they're not interested. And most people think that gold is really risky and volatile.
Gold delivered its best annual performance since 2010, climbing over 26% in 2024 as investors turn to the precious metal for safety amid global uncertainties and expected shifts in monetary policy. Central banks significantly increased their gold reserves, diversifying away from currencies and driving prices to record highs. Federal Reserve rate cuts and escalating geopolitical risks further propelled gold's ascent, with Goldman Sachs projecting prices could reach $3,000 per ounce by 2025. Do you agree with Goldman Sachs' projection of gold reaching $3,000 per ounce by 2025? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.